Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe. Very excited for today's show. We've got none other than Param Singh here with us. And incidentally, I just recorded a podcast episode on his podcast. So, Param, welcome to the show today. Happy to have you.
Thank you, Brian. Yeah, really enjoyed having you on our podcast. So I'm glad we got to do this again.
Yeah, and of course, the focus is going to be flipped. Last time I talked about me, and now we're going to have you talk about you. Before we do, though, tell everybody where to find your podcast.
So we have a podcast. So my company's called Spur Equities. And so our podcast is called Spur Your Wealth. So we're trying to spur your wealth by investing. But you can go to spurequity.com and there's links there to all of our past podcasts. And then you can subscribe on any one of your podcast platforms, Spotify, Apple, etc.
Awesome. Sounds good. And yours is a fairly new podcast, right? You've been doing it for how long have you been doing it now?
It's just been about a year now. I think we're about 35 episodes in. So yeah, fairly new, but we try to bring a lot of variety to it. We got investors, we got sponsors, people that are doing a lot of different things. So that's where I think we find a lot of value, right? In, alternative investing and different ways of investing in real estate so that, listeners can get a wide variety of, what's happening in the real estate world.
Yeah. So it's not just your real estate. I see we got, diversification tactics. You've got some tax secrets. You've got a lot of good stuff all on kind of general building wealth and then a lot of real estate stuff as well. So
absolutely.
Awesome. People listening, go ahead, check out his podcast, give it a 5-star rating and review if you have time. And that said, but let's go into talking more specifically about you. So tell us your story, how you started into real estate.
Yeah. So my background, typically it's like the typical immigrant story, right? My father came to the US with less than $100 in his pocket. He set his sights on the American dream. So he worked hard, various jobs, puts us through college so we can be professionals, right? And not just a job, but have a good career with a good salary, bonuses, retirement account, and all that stuff. And so that's the path that he set us on, so I've been doing that. So I did that for a good 20 plus years, got to be an executive of a global IT and management consulting firm in the pharma and life science industry. And so and my wife was doing, same thing. She was consulting. And so we were high net worth earners. So as far as my investment journey goes, like we knew that we had to invest in real estate. So we, just like everyone else who doesn't have a whole lot of avenues of figuring this stuff out. We sort of figured it out on our own and started doing like single family investing on a really small scale. And then, just a few years ago, we started to, my brother was doing his own stuff in single family and real estate. He's a real estate broker helping people buy hotels. And so we started kind of looking at it and saying, hey, should we be doing this differently? And should we be doing it together? And so we then said, okay, what should we be focused on? And as we looked at all the asset classes, we're like, hey, let's narrow in on multifamily because we're like commercial multifamily has a lot more advantages than single family. So we sold all of our assets and we started to look at multifamily and we did really well, right? With our own money, we bought smaller, sort of units. Like I think our first purchase was a 16 unit property. So we did well, didn't really know what we were doing, but we kind of figured it a lot along the way. But as we did well, friends and family came out and said, hey, you're doing well. How can I participate? Right.
Yeah. And that's a nice point to reach when people are starting to ask you to invest in your stuff. That's kind of the holy grail for a lot of people. Yeah,
exactly. And I was working full time, so I was trying to do this. And a lot of our friends and family are, there was doctors and lawyers and IT professionals and, so they didn't have time either. So I was also looking for a less time consuming way of investing as opposed to purchasing and managing, some of these smaller assets. So we started looking at finally the syndication model, right?
Yeah.
Like, how do we do this in a bigger scale? But you can't do that unless you understand the whole mechanism. And, there's SEC and there's all these laws. And we looked into all of that. We launched our company, Spur Equity, in December of 2019. That was our first kind of syndication that we launched. And then fast forward to today, from 2019 to 2024 now, really just a little over 4 years, right? Because it was end of 2019. We've done 15 plus deals. We now have 3,500 doors, as a sponsor.
Nice.
And so, it got to a point where I didn't do it by design, like necessarily to say, hey, I want to do real estate investing to get to a point where I can leave my job necessarily, but
Yeah.
it ended up allowing me to do that, which has been such a blessing. And so I left my W-2, started doing real estate investing full time, kind of
Yep.
managing my private equity company. I still do a little bit of consulting kind of independently, because I think the mental challenge of working in life sciences and healthcare is still a passion for me, but
Yeah.
primarily, using private equity and real estate investing as the main mechanism of kind of providing for my family, right? Getting that income generation from a variety of different projects, and actually coaching our investors to do the same thing, whether they're doing their business owners and they're full-time, sort of running their hotels or what have you, or their doctors, lawyers, whatever. They're not going to leave their job, but we're allowing them an avenue of additional income streams through real estate investing. And so that's been a great journey, being able to do that. So really thankful that I was able to do that.
Awesome. Awesome. Well, we're going to circle back and just kind of hit some key points in that journey. I mean, I know you gave some reasoning, so asking you to go kind of a little deeper into kind of your mindset and what triggered each one of these things. But you said you had a good, essentially W-2 job, and you started investing in single family. So walk us through kind of that decision and kind of the challenges you had when you started that out.
Yeah. So I think the jump into single family was really almost like, you hear that you should invest in real estate, right? Like everybody knows that we should invest in real estate. And so the only thing that we had in our mind, as my wife and I, was like, hey, we have the savings, we have, let's say, $50,000 kind of sitting on the side, or $100,000. The only thing that we thought we could do is like, hey, let's just go buy a house. Right. Let's go buy a house. Let's rent it. And we actually went to vacation with our daughter, Disney. We got pulled into some real estate, kind of tour or whatever. And like, hey, you could buy a villa. And at that time, there was no Airbnb, right? Airbnb wasn't a thing, but they had short-term rentals in Disney.
Yeah.
And so we're like, hey, we can actually afford this. Like, let's buy a house. It could be our family's vacation home, and they'll manage it and they'll rent it, kind of short-term rentals, weekly rentals at the time, right on the gates of Disney. And so that was our first kind of jump into it. But really the impetus was, we knew that we should be investing in real estate. We already had our, we had our stock portfolio, we had our 401k. So we're like, all right, we should be investing in real estate. And this was the opportunity that kind of came in front of us, and we did it. And this was before, again, like I said, before Airbnb was a thing.
Yeah.
And, in hindsight, maybe I would have done differently had I known all the different things that we could do in real estate. But at that time, early stages of kind of, there was no podcast back then. And so, we just did what we thought we could do. And it turned out to be a great thing, but it didn't generate the returns that one would think today that, hey, this is good. So in our minds, it was like, all right, invest in real estate and it'll appreciate, whether it's making cash flow or not. It really wasn't making cash flow, but it was paying its expenses and everything. So, for us, it was good. And we had property management kind of running it, and it was kind of hands off, and it was great. So that was our initial kind of jump into it. And then the thing that we kept going back to is like, hey, when we have a little bit of more money, is like, hey, why don't we buy another one? Like buy a small one and kind of rent it out long term. So those are the kinds of investments we did early on. They were good investments, but they weren't generating returns like what our investments do now. And we look at in real estate investing in a far different criteria now, where we want to generate an income stream that's separate to our whatever our day job is, right? And so we wanted to make sure that there is multiple streams of income coming in. What I realized late in the game, when I realized it was 20, I'm 15, 16, 20 years into a corporate job, was when I realized that, wait a minute, if tomorrow I get laid off, right? Tomorrow I lose my job, I don't have any income actually coming into my bank account. Right. Yes, I have an investment property that is worth something. I had to have to sell it to get that in, but I don't have any other income stream coming in. So that was the aha moment in saying, we need to think about real estate investing in a different way, even if it's just a little bit, right? A trickle coming in from one property and another trickle from another from another. That's what I wanted to then build to say like, okay, yeah, I'm not leaving my job today, but if God forbid something happens and I get laid off, that we still have income coming in. I can still provide for my family.
One thing you mentioned, I think I feel the same with my first investments. If I knew back then what I knew now, what I know now, I would have started with single family. I think me personally, I had to have that single family experience before mentally I was ready for the multifamily. If I didn't have several years of, renting single family homes out, I don't think I ever would have had the gumption or the courage or whatever you want to call it to even try to buy something larger. But anyway, well, thanks for sharing that one. I mean, who doesn't want a home by Disney, right?
Yeah.
So next, I mean, the kind of the next transition you mentioned, getting you and your brother sat down and started talking about commercial real estate, and you settled on multifamily. What were some of the reasons that you specifically went towards multifamily, and then after that, just go right into what it took to get started in the multifamily?
Yeah. So, we, like I said, we had the single family long-term rental,
Yep.
single family short-term rental kind of experience.
Mhm.
I also did I did a house flip, like
Mhm.
a quick
Yeah.
flip, and made money on it. But
Mhm.
when you do all of these things, you quickly find out the things that you don't like about it, right? And
Mhm.
so, and I say
Yeah.
this a lot, like the thing with real estate, the greatest advantage of investing in real estate is there are so many different ways to
Mhm.
actually invest in real estate and make a return. The flip side to that is the con, or the drawback of real estate is there are so many different ways
Yeah.
to make a return. And so you have to choose. You have to figure
Mhm.
out what fits your personality, what fits your lifestyle, what fits
Yeah.
your drive. And I'll give you an example. So like I did a flip and I
Mhm.
made money on the flip, no doubt. But
Yeah.
the amount of time that it took me to do it and the amount of stress that I went through, the amount of headaches that we had, it
Yeah.
just wasn't for me. And I have friends of mine that thrive on house flips and they do
Mhm.
really, really, really well, but it's designed for a certain personality. And that's just
Yes.
not me. Right.
And it's not me either. I did one, and that was
Yeah.
enough. It was
Yeah. It
just
was
like,
enough.
it was
Exactly. And I
enough.
made money. I didn't lose
Yeah.
money on it. I made money on it. I was like, I'll never do that again.
Yeah. I tried it. And I mean, for me, it was basically leaving my job, my W-2, going straight to the property, putting in 3, 4, 5 hours of
Yeah.
manual labor. And then, I mean, some days sleeping over at the place, I'm just like,
Yeah.
yeah, I mean, granted, there's more efficient ways to do it, but yeah,
And you
I mean,
learn those things along the way, right? And
yeah.
so for us, like when we looked at this and we're like, hey, what are we doing? What should we be doing? And why should we look at, certain asset classes? And my
Mhm.
brother Rav, he's a hotel broker. He
Yeah.
buys and sells hotels for his clients. So my initial reaction was like, hey, Rav, should we go buy a hotel? You know everything about the hotel industry. Like we should go buy a hotel. And he's
Mhm.
like, no, we shouldn't. I was like, why? He's like, I see how hard these guys work in operating
Mhm.
a hotel, and
Yeah.
we're not operators, right?
Yeah.
We're not going to be, you still have your day job. I still have my brokerage. We need to get an asset that is recession resistant, that can generate the returns, that
Mhm.
we can put in mechanisms to almost put it in autopilot mode,
Yeah.
right? And so that's why we focused on solely on multifamily initially,
Yeah.
because we're like, all right, as soon if we get renters in there, we have tenants in there, it's kind of clockwork. We'll have a maintenance guy, that kind of thing. And so the small property that we did, people think like, oh, multifamily, that's a passive investment. It is not a passive investment. If
Mhm.
you're managing it, if you're looking after it, it's not as easy as just collecting rent, right?
Mhm.
And so we found that out really quickly. And so it was our own money. We didn't cash flow from that property at all. We just put that out there. That first property, 16 units, great property. We picked it up at a great price,
Mhm.
but we didn't cash flow because we didn't necessarily do it the right way. We didn't have reserves to be like, all right, we're gonna do these improvements and do,
Right.
we didn't do it the right way. However, we still made a great amount of money when we sold the
Mhm.
property 2 years later. And
Yeah.
it only took 2 years to double or nearly triple our equity.
Mhm.
But that whole 2 years, like we were managing it. So like I
Mhm.
was there on a Saturday, every Saturday we were,
Yeah.
collecting rents, we were processing evictions, we were, I even fixed a toilet or two, fixed some mailboxes, things like that.
Yeah.
So again, you find out this is not what I want to do long term. Like you said, it takes that experience to know that, okay, the next time we do this, I'm going to hire a property manager. I'm going to hire a guy. I don't want to get the calls at 2 a.m. when something's not working. And so I'm okay with making a little bit less return, but I'm going to put in a professional so that I don't have to do that. Right.
Yeah.
And so that's how we grew from there. But multifamily was really, when we looked at it, we're like, operationally, we understand it. We know what to do to make it work. And we can leverage other people's expertise to run it more efficiently. Right. And so one of the things that I had to learn was I do not have to be an expert on every aspect of that business. Right. And there's people out there that know property management, asset management, or whatever. Right. That's why we focus on multifamily. We're still very, very bullish on multifamily, even despite kind of the, challenges that asset class has had in the last 18 months. But we've now diversified into self-storage. We're doing some land development. We're doing some BTR, but it's all centered around living. Right.
Yeah.
So real estate is all centered around roofs and tenants, people places where folks need a place to live. And that's the driver of the real estate investments that we're doing primarily. And so that's been kind of the core of our business for the last 4 years.
Awesome. All right. But so next question for you, I think kind of like that, and then the next transition phase is when you go from doing things by yourself to syndicating and bringing other people's money in. Let's talk about how that worked out for you guys and some of the challenges you guys had there and basically how you guys managed it after.
So that's a great question. And, we had a different experience than most people when they start to go into syndication and start to raise money where they're looking for capital. We actually had capital ready for us because we did our own property. We did a 16 unit, and then we 1031'd into a 55 unit or 52 unit property, and we were selling that. And so we made money along the way. So people saw that we were doing this, we were communicating that. And so friends and family came out. They're like, hey, you're doing real estate. Like, how do I go in with you? I don't have any time, but I have money to invest. So how do we do that? And so Rav and I were like, no, we don't want your money. Like, let us figure this out. And so we had a different experience than most syndicators where we had capital ready. It was a good problem to have, but it was also nerve-wracking because we didn't cash flow in our properties, like I said, right? Like, so when you take investor money and you're like, all right, I got to figure out a way to do this where I'm providing a regular return to those investors and I'm beholden to them. So I have to, size this right, projections, all this stuff has to be on point. And so we weren't the experts. So we actually partnered with somebody that had a great track record that gave us an opportunity to say, hey, why don't you bring in some equity? You don't have to bring in the whole thing, but we're going to operate it. We're going to run it. You guys can learn as you come on board. That's how we jumped in because another expert sponsor gave us an opportunity to be kind of part of that team. And then also provide some expertise from an asset management perspective, investor relations perspective, because my consulting background gave me the, sort of operational kind of expertise on running a business. And then on the brokerage side, Rav had the expertise from asset acquisition and disposition and all that network. So those are the first few opportunities that we had was partnering with somebody that was a little bit more seasoned than us, had a track record so that we could raise money for a larger project and kind of go from there. That was game changer for us. And I think, partnerships is really the reason for our success and being able to do that.
Yeah, I think you bring up a really, really good point. And it's something that everybody's going to have to answer at some point. You don't start this business with a lot of experience, and so if you're raising money, you always have to answer that experience question, whether you're getting a bank loan or friends and family or whatever. You always have to answer that experience question. I think there's no one right way, but I think you guys did it a right way where you partnered with somebody with experience, who you can trust, and then you bring your investor money to a trusted individual. So I think that's a really good way for people to start with the game. We did something slightly different. We brought somebody with experience into a deal that we were running. And quite frankly, looking back at it, I think we would have been better off bringing our investors to somebody else. I mean, we We didn't do terrible, but we had a lot of growing pains. Let's just put it that way.
The partnership thing is key, and that's one of the main reasons for our success. And in our language, in Punjabi, we have a saying that essentially says 1 and 1 is not necessarily 2. It can be 11, right? Standing next to each other. And so if you're standing next to a partner, you're more than the sum of your parts, and you're able to accomplish much more together. And so partnership is huge in this business. And I like real estate for that fact, because are folks like yourself and other people that we've met in a market space where we're potentially even competitors, right? In going after real estate projects. But rather than being a competitor, you partner and you can go further together. So we found a lot more people that are willing to be collaborative rather than competitive. And that's able to change the game, both for us and them. And, we started this where somebody gave us a chance to raise money on their projects. And here we are 4 or 5 years later, and we're giving other people an opportunity to co-sponsor with us and come in and say, hey, you could be a junior, sort of sponsor on one of our projects. And so being able to give that back, and it's just been huge, right? To be able to enable other people and coach them to rise to our level. I used to run half marathons and stuff. And I used to think that was the only sport where when you're passing somebody, the atmosphere in a marathon is awesome, because when you're even passing somebody, the person that you're passing is giving you the high five, like, awesome, man, good job. And I find that in real estate, like when I'm being successful or when somebody else is successful, genuinely, you feel proud and you feel excited for them, and you're wishing them the best. And because there's just an abundant amount of things that we can do in real estate. So I love seeing other people succeed. And I feel that same atmosphere and attitude back to us when we succeed.
Yeah. And it's definitely true that, there are more collaborative opportunities than competitive. I mean, obviously, when you're putting offers in, you are frequently competing with people, but I have literally had people that found out they were competing with me text me or call me and saying, hey, Brian, how can we work together on this?
Yeah.
There's 2 offers on the table, yours and mine. Do you want to partner and take this down? I've had that happen several times before. And I think, it's just one of those mentalities where having half of something is better than having, all of nothing, but very much appreciate that. Well, bring us up to date. You talked about, you're now kind of in an owner operator role in a lot of these properties, and how's that going for you? And what are you guys looking at right now?
So we've gone through a lot of learning. With every project, you kind of figure out what your strength is and who you want to partner with, what those relationships look like. We do own and operate a number of our projects, but we're leaning towards working with really, really seasoned, very, very operators in different geographies. And then us being the capital arm. So raising the equity to enable those projects. So that's how we come in as a sponsor. Well, I'll give you an example. We have 4 projects in North Carolina. We have a number of projects in Phoenix. I don't live in Phoenix. I don't live in North Carolina, but we have a partner there that has been excellent from an operational standpoint. And so we've partnered with them on, one project. It's done well. It's going well. And we're doing the next one. And with each project, we're raising a little bit more equity, getting to a point where the relationship, we're like, hey, look, I love what you do as an operator. I want to enable your pipeline. Go find the project. Don't even worry about the equity. We'll figure that out. Right. Yeah. So we'll figure out the capital. That's kind of where Rav and I's strength is, trying to enable people that are doing really, really good in what they do. The other aspect of where we're going, but we have gone into diversification. It's really an investor mandate for that. They're telling us like, hey, I want to invest in different classes, different geographies. So we brought that, but now they're like, all right, let's look at different asset classes. We have a mix of new construction. We have a mix of existing assets that are cash flowing. We have self-storage. We did a couple of land projects where the runway is, with multifamily, the hold on the projects on a value add is anywhere from 3 to 5 years, maybe even 7 years. But a land project, it's about 18 months. It's 12 to 18 months, and it's quick in and out. It's, it's a good return, a little higher risk. But again, from a diversification standpoint, our investors are asking for long-term projects, short-term projects, so they can, kind of put their money in different buckets, so they're not exposed all in one asset class. So, and then most recently, we're now getting into hospitality. So syndications of hotels. So we've done industrial too. So about 18 months prior, when kind of the interest rate stuff was happening and the predictability wasn't there, we did an industrial only real estate project, which was absolute triple net, so that the inflationary pressure of insurance and expenses and taxes, all that stuff didn't even come into play. So we have this very modest kind of return on industrial assets that we did in industrial fund. So those are just some of the things that we're doing because investors are asking for it, right? Rather than them having to go somewhere else and find those types of projects, we're actually incorporating that under the Spur Equity portfolio umbrella. But most recently, it's hospitality, because we want to leverage Rav's expertise on hotels. But again, we're not operators, so we are partnering with the best operators that Rav knows. And so we're then purchasing, Marriott's, Hilton's, those kind of properties, full service, so that we can do like a 3 to 5 year kind of improvement and then sell project for investors.
Awesome. Yeah, I love, I mean, you keep on coming back to you guys are operating inside your strengths. You've done a lot, and over time you figured out, hey, this is what we're really good at. And I think that's one of the keys. There's lots of things that help people be successful. But I mean, that's one thing that I found over time is, try to find situations where everybody's operating in their strength, and that does wonders for everybody's bottom line. But we're about wrapping things up right now. So 3, kind of final questions for you. And the first one is, what's next for you?
What I get excited about are some of these projects where we're playing to our strengths, and I want to do more with less. So what I mean by that is, even for me, because I'm finding operators that are going to excel in their job, that means I have less time that I need to devote to that project because I have a very, very seasoned operator, kind of in it. So for me, and I want my investors to kind of think about of this in the same way, is that it's not about money, it's about the lifestyle, right? So I want to, even as a GP, I want to create a lifestyle that allows me to enable people that are doing something really, really well through the capital and the investor network. And so for me, as well as my investors, right, money will come, but like what we're trying to do is create a lifestyle that has this automatic return. So those are some of the things that I get excited about, is that being able to do more with less and having our money work for us and not us actually, having to spend the time on it. So that's kind of, we're trying to create scenarios and situations and find projects and operators that will enable us to do that on a long-term basis. But ultimately for me, I got into, being a GP and an active investor because, for my family essentially, but even my goal is I want to be an LP. I want to be an LP. I want to go to you and say, hey, Brian, here's $200,000. I want to invest in your project, and you run it, right? I want to be an LP because I'm a lifestyle investor. Ultimately, I want to have time to focus on my passions and travel and spend time with my family. That's the only reason I'm doing any of this, right? I want to make sure that my why is at the forefront of every decision that I make, either as a GP or an LP.
Yeah, and I love it. I mean, eventually that's my goal too, is just to be a passive investor. Drawing out of that, Robert Kiyosaki cash flow quadrant, I want to be in that I quadrant. I want to just be investing and making money off the investments. But for me, it's taken going from the E to the S to the S to the B, and eventually from the B to the I to do that. But well, cool. Well, next question, and here's my favorite one to hear the answer to is, if you were to give advice to somebody who's just starting in the multifamily industry, what would that advice be?
I'd say the biggest thing for me is, like you and I talked about this earlier, is I wish somebody had told me about all these avenues early on. And so I'm a very analytical person. I have a consulting mindset. I have to have data to support a decision. However, I think sometimes that becomes our hindrance. And so we stand on the sidelines just evaluating and analyzing and evaluating. And so the best way to learn is to do. And I truly believe this, that whatever you do, it's either success or learning. There's no such thing as failure, right? So I've failed many times in investing, right? You think about the stock market and some of the hits that we've taken, or even my first couple real estate ventures or whatever, but it was a learning. I learned very quickly that this is not the way to do it. I'm going to do it differently next time. I'm going to do it differently next time. I'm still learning. Every project is different because we learned something. And all of those projects have made money, right? Maybe not as much as they would, but it's all success or it's learning. And so I urge people that know that they should be investing in real estate to figure it out, right? Just learn by doing. And so whether it's, investing passively is probably the easiest way to do it, because you can find somebody who's really, really good at what they do and just invest with them. If you have the personality that can do a house flip or a wholesale or run an Airbnb, like absolutely go do that. And maybe 2 years into it or a year into it, you'll figure out like, oh no, that wasn't for me and I'll do something different. But it's success or learning. So I would say just do, and you learn from doing. That's the best way. That's absolutely the best way.
Just do it, and both of us earlier said that, in retrospect, we probably would have started somewhere else, but you wouldn't know that if, or we wouldn't know that had we not just decided to do it. Hey, you got to get in, you got to start somewhere. So you might as well start small, start now, get that.
And one thing I'll mention also is that some people think like you absolutely need money to get started with real estate. And that's not true either. There are plenty of avenues. And again, you can go on, I'm sure, Brian, you've had people on your podcast that talk about ways to get started without actually investing or having capital in hand. And so there's avenues where you can do it without money in hand. You can get creative with real estate. So don't wait, try to invest somewhere and figure it out. And then you'll quickly find the path that fits your goals.
Absolutely. All right. Last question. How can listeners learn more about you?
Thank you for that. So SpurEquity.com. We're in San Antonio, both Rav and I. So we had to do an homage to the San Antonio Spurs.
Something Texas, right? Yeah. Spurs.
So SpurEquity.com is the best way to find us. Our podcast links are on there. We have some video intros to both Rav and I and our story and our journey. And what we do in Spur Equity. That's the best way to learn about us. But we're also on Instagram, on LinkedIn, on Facebook. We're all on the social media platforms. So it's at Spur Equity, really easy to get to. So that's the best way to learn about us.
Awesome. And we'll make sure we have links in the show notes for anybody who's ready to look that up. But Spur Equity out of San Antonio. So, well, awesome. Hey, thanks for coming on the show today. Very much appreciate your time, and thanks for adding a lot of value.